Singapore have 4 digital banks licenses, Malaysia have 5, Philippines have issued 6, okay, and Thailand is actually on the way setting up this regulatory framework. They have not started to issue the license yet. And Indonesia is the one that we already seen, I think, 10 or more digital banks in Indonesia, where Indonesia does not practice a new digital bank regulatory framework. They will adopt the existing commercial bank framework.
About 26 out of 250, roughly about 250 digital bank is losing money. Okay, 26 is making money, but the remaining is losing money. So about 90% is not, well, not to say losing money. They are in loss, but they are not, because
but when it comes to the last 5 years, you can see is when they actually enter into Asia Pacific, that is a different landscape that given you opportunity to turn around the bank within 2 years. China Maybank, China WeBank, 2 years. Okay, who else? I have a long list on my hand. Bank Jago, less than a year. BNC Bank Indonesia, also within 2 years. So you have many of the success story within 2 years. The wallet operator only have the e-money license. They are not able to take in deposits. They are not able to provide lending. So they can't do buy now, pay later, although they have massive of data and opportunity. So they need a license, which the digital bank or the incumbent bank can actually provide this convenience.
Hi, welcome back to our podcast, Banking in the Cloud. My name is Roslan and I'm host for your podcasting or YouTube channel for that matter. And today we have with us, this is I think our third series of podcasts. We have discussed about the application of a digital bank or mobile digital bank. We have discussed about DevOps in our last podcast. And today we are talking about the scenarios of digital bank in the world and specifically in Southeast Asia. Now today with us is Mr. Chong Eng Kok. So Chong Eng Kok, I think. Maybe Ike, if you could just morning, Ike, how are you? So I'm wearing red. It's Chinese New Year still on. So to those Malaysian and to those of you who celebrate Chinese New Year, Happy New Year, right? And let's hope this New Year will bring you prosperity, wealth, health, happiness, and success. Yeah. With that, Ike, welcome on board to our podcast. I think this is the first time you're with our podcast. Maybe just give a brief introduction of yourself, Ike, who you are.
Very good morning and Happy Lunar New Year. Okay, my name is Chong, or you can call me EK. I'm the head of sales and marketing in INFOPRO. I'm also carry the title of Chief Digital Officer. For the past 2 decades, basically, I used to deal with bankers and to do the consultations and advising the banks how to do the transformations. And today, we are talking about the digital transformations and how it leads the banks into becoming more and more digital, and therefore we have seen a lot of digital banks emerge in these regions, and this is what we are going to discuss about today.
I think that's interesting. But before that, you're getting 2 paychecks, is it? One is the head of sales and one is the chief digital officer.
We're getting a 2-in-1 paycheck.
Okay. Anyway, this is I think the right forums or the right platform to discuss because I think with EK experience first in digital as a chief digital officer and second as marketing as well. So not only his knowledge, he have that knowledge, but he's able to see out there to the client and to discuss with the client how and what and how do we do digital banking? How do we then help you to do digital banking, right? So I think before we go to the technical and go into details on digital banking, what's actually is the difference between the incumbent bank and also digital bank? What is the difference there?
Okay, fundamentally you can see that actually digital bank is a new entrance into the market. So basically prior to digital banks, there's not much of innovations or transformation from the banking for the past 20-30 years. Okay, ever since when UK first launched the Atom Bank as what they claim as a digital bank, which they created a new niche markets. Okay, so digital bank used to be very nimble, agile, and they actually target specific market segments. Okay, those are the segments typically which is more high risk and low lucrative to the banks. That's why it has been abandoned by the majority of the traditional banks or incumbents. Okay, now that create a market gap. So when this market gap came up, many of the fintechs actually emerged to become bank, getting the bank license and move into this area. So what they do is they actually they stay very focused. Okay, so that's why they create a very specific and targeted products to address these market gaps. Typically, you will see they will actually start from entering into the lending market and eventually scale up and getting the deposit taking license and things like that. This is how they move. Okay, they do not try to compete with incumbent banks in the full scales. They don't do a full commercial bank, they don't do wholesale banking, but they stay focused. So this is the primary difference between digital banks and an incumbent bank.
Okay, so I think in 2024, because of the population of the world are getting more younger, so those baby boomers, people like over 50, above 60, so the traditional who use the traditional banks, I think will ultimately be replaced with this Gen Z, Millennium, and I don't know what's the next one, there's 3 Gen, but they are actually the target market for digital bank, because these are digital savvy population, and I think this is the reason why I think the need to be, and also I think because of COVID comes in where face-to-face interaction is not available. So I think that's why it speed track, or it speed up the process of digital bank. Now, what is the trend of digital bank? I mean, we talk about digital bank. What is the impact in the world? What is the impact in Southeast Asia? Is it just acronym? Is just hype, digital bank, or is this really happening?
Oh, basically, digital bank is actually riding on the increase of these internet penetrations or mobile penetrations. As you can see, today's people can live without a internet or laptop, but they cannot live without a mobile phones. Okay, that create a massive advantage to digital banks. Okay, now as what we can see, digital bank emerged from US and from Europe and UK. There are many US and UK and Europe-based digital bank in the past 2 decades. Okay, so what happened is actually slowly we see the new digital bank emerge in Asia, starting from Kakao Bank in South Korea, My Bank and WeBank in China, and many others, and Paytm in India. Okay, and those are the big players. You associated it to big names like Alibaba, Tencent, and Kakao, these messengers, which is well known #1 messengers in South Korea. Now, when it comes into Southeast Asia, the landscape are very different in the way that you can see that when it comes to Southeast Asia, okay, probably this is more regulated environments. Okay, we try to be more conservative. You can see that a lot of central banks, different jurisdictions, basically they're setting up a different digital bank framework to serve as incubations. So to make sure that these banks really successful. That's why when you see the setup of the digital banks in Southeast Asia, many of them are led by conglomerates and a lot of partnerships in a consortium.
Okay, so before we go into Southeast Asia, that means in reality, digital bank is not a hype. It is happening. That means in Europe, in UK, in US, it is coming in, and I think as you mentioned, Kakao Bank in South Korea is happening, and it's already in practice now. It's already running.
Yes.
Okay, let's take a break, and then we'll come back shortly. Just now we were talking about digital banking or digital bank. Digital bank is not a hype. It is actually happening in the world. It's happening in, again, as I mentioned, UK, Europe, US, and now the trend is coming into Southeast Asia. But before we jump into Southeast Asia and look at how the digital bank is coming up into Southeast Asia, is it is it is this bank making money? Is digital bank making money because of the investment, because of the non face to face? Is it profitable for a digital bank?
Okay, interestingly, there are more than 250 digital banks worldwide right now.
Okay.
Okay, and it is still growing.
Mm.
And out of these numbers, guess what? Up until 2022, there are only 26 out of these numbers are profitable.
So only about 10%.
Yes. Actually, they take very long time to recover for their return of investment. So typically, we can split them into two groups based on the research such as from the white path. Okay, what happened is the independent banks, they take typically around 5 to 6 years to actually recover to turn into profitable. Okay, whereas the conglomerate led, the consortium led kind of digital banks, they take shorter time to recover.
This is
Typically
because
around 2 years.
this is because if you're on your own, standing on your own, this is because you're set up. Your heavy investment on technical, on technology, and also your working capital, and also trying to get your customer base quickly. This probably be the challenge because it's like conglomerate. They have a database ready.
You are right.
Capital is available, so it's basically a shift from a traditional bank to a digital bank, or not a shift, but additional digital bank in the conglomerate. Whereas this one is just starting up. So I think that's
Yes.
that's the reason of not to say losing money, but it takes time. It takes probably 5 or 6 years, as you say, for the ROI to recover the ROI. Okay, then let's talk about. Are we okay on that? Let's talk about how.
Let me add
Sure,
on a little bit.
sure.
From the 26 profitable banks, right? Guess what? 15 of them or 60% of these profitable banks are in Southeast Asia. Okay.
So you have 10% making profit, roughly lah, about
Yeah.
10%. So if based on 250, 26 is about 10%. But out of this 10%, 50% is coming
60%.
in, 60% coming in from Southeast Asia.
Yes.
And they are making profit. And,
Yes.
Oh, interesting, yeah?
Surprisingly, Bank
surprisingly-
Jago make profits in 1 year. Okay. That is
So-
a best record that we have.
What does it tell us? It tells us that the Southeast Asia population is more tech savvy, is more hungry for looking at digital bank products, digital bank futures, where ease of usage, where they don't have to interact FTF, maybe face to face. Maybe the trend is there, but let's discuss that later. How do you see the trend of digital bank in Southeast Asia? We know that 15 of the 26 is from Southeast Asia. But what is the next opportunity, or what is South Asia opportunity for digital bank?
Now, that's why Southeast Asia is become very unique, okay, for the digital banks landscapes. Okay, now we know that majority of the countries are developing countries. Okay, that actually accounts for around 70% of unbanked populations. So number one, the population is huge. Number two, the typical playground for a digital bank is actually basically targeting on the micro SME or SMEs is enterprise. So this is where this particular market account for 70 millions of micro SME.
I think that's the keywords. If you're talking about micro SME, Southeast Asia, we have in this particular region many micro SME compared to US or Europe for that matter. And as such, it accounted, as you say, 70%. So as such, that's where explain where the profitability comes from.
Yes. So that's where there is a ample opportunity in terms of lending. They are not so much on the deposit taking, although there are a lot of so-called cash society, but actually it takes some time to do the educations and to include them into these financial inclusions. So take for instance Philippines has been increased from their financial inclusion performance in 2018 is just around 30%. And today they are already 55% bank populations, and they are eyeing at actually achieving 70% by end of this year.
So in short, yes, Southeast Asia is becoming a so-called a profitable business or profitable venture for a digital bank. But I think, as mentioned, 70% comes in from micro SME. So it's more on 70% is more on lending. Their return is from lending rather than deposit. I guess it's easier to take the bank money rather than give your money, like if you put it in that way. That's why the I think the deposit, the scale of deposit growth is not as fast as the micro SME growth, because then they still have doubts about putting their money there, not facing any human, but just going through the application or going through the webs, go through the apps to do this. All right, good. I think that's the trend. I think micro SME, Southeast Asia. I think in terms of tech savvy, if you compare to Europe, maybe we are more tech savvy than the others, or maybe we are more hungry. Southeast Asia population is more hungry to try new things, to try digital bank, and to have ease of dealing with the banks. Mm. Uh, if let's say we compare digital bank in Western country and we compare digital bank in Southeast Asia, is there a different, or is there something that we can say, hey, if you go to Europe, digital bank is set up differently. If you come into Southeast Asia, it's set up differently.
Basically, when it comes to the setup between the two different continents, okay, we are looking at from the Western side, typically they are coming from a very granular license. So they may be granted for just a personal loans license. So that's where they only started with personal loans. And eventually when they grow big, they only scale up and offer more products and gradually become full commercial banks. Okay, and we can see the trend is that they are more hunger for acquiring customers because they are actually looking at growth instead of looking at profitability. That's why they invest a lot of money in expansions, in acquiring customers. Okay. Whereas when you look into the landscapes in Southeast Asia, so as I said earlier, we are more conservative in this way. So in Southeast Asia, we have, depends on the countries that you enter to, countries like Singapore, Malaysia, Hong Kong, and a few other countries, they have a proper regulatory frameworks. You must apply for a digital bank license if you want to operate under a digital bank. Okay. Now, what this means is that there is a regulatory frameworks that you have to comply to, and at the same time, there is a constraints that actually applies to you. Example,
is that sorry sorry to interrupt you, but are you saying that the regulatory in Europe and in US is not as comprehensive as when they when they structured their law for digital bank compared to Southeast Asia, compared to Malaysia and Singapore?
Actually, in the Western side, they are more relaxed. They treat it like a normal traditional bank's license, but it's just a scaled down bank's license. There's no specific requirements for digital banks. But in this case, we have pay up capital definitely different. There are some constraints of maybe deposit taking. So they cap your deposit taking to a certain amount. Example, Singapore just uplifted the cap from 5,000 Sing dollar to cap previously. Now you can actually deposit up to 75,000. Imagine in the first year of your customer service to your bank customers, they can only deposit maximum 5,000, nothing more than that. So how can you use this as your primary account? You can't. But that is an incubation period because the different in different jurisdictions the central bank have different measures so to mitigate their risk. So because any risk to a digital bank when they actually bankrupt or they're being acquired, there is a massive impact to their internal economy. So that's why they take it as a very careful step towards this digital bank, and at the same time they try to protect also as it's an incumbent bank. So they do not want them to actually compete head to head, but they want to create a different maybe blue oceans for these new players.
So I think just to conclude what you have said, the regulatory, the authority in Southeast Asia is more what do you call it? It's more the ability is more quickly to adapt to changes and quickly to listen to the feedback from digital bank. Example, you're saying the deposit, if it's $5,000 per customers, I don't think you will attract a lot of people. It's probably that's not what the bank want. Then by increase it to 75,000, then I guess the bank can quickly have their capital from there for them to actually give out the money for borrowing or to lend out the money, and that's where the return comes in. I think a central bank, if you're looking at investing or coming in with digital bank in any particular country, the central bank of that particular country needs to be looked at on how quickly they adapt, the adaptability to changes, the adaptability to request from the digital bank. Hey, I need this to be changed, not to the extent of breaching the law, and not to the extent of against competing the normal traditional banks. I think the balance needs to come in there. I think that's interesting. That's interesting to look at. Then
That is especially
especially
true in the countries such as Singapore and Malaysia, where we are quite matured because we practically don't have much of the unbanked populations.
yeah.
So they are actually addressing the underserved in this.
Yes. I remember when we were involved in proposing a digital bank from Malaysia. I think the central bank plays an active role. The central bank callings the so-called potential digital banks for discussion, for brainstorming, that sort of thing, so that not only to prove that they have the capacity, but to look at technology, to look at know-how, to understand the whole concept of digital bank before a license is granted. I think that's a very positive measures or steps taken by the central bank to ensure that the one is did not compete with the again the traditional bank, but then again adaptability and quickly change. I'm sure the central bank have a few years so-called strategies how to do this, and a few years regulatory requirement how they're going to set up this, because I think digital bank is quite new. I think in Malaysia, I think there is one digital bank now is running and trying their applications available to public now. I don't have to mention it, but if you look at FB news and all that, you probably know which digital bank is this. So we know there is a different because of regulatory, because of incubation specific. Now, how do we then set up this digital bank, especially in I don't know, in Southeast Asia? How do we do this?
Typically, there are a few ways of doing the setting up a new digital banks. Okay, commonly you look into the markets. Okay, of course, number one is to apply a bank license. Okay, a digital bank license or just a normal conventional bank license or Islamic bank license. All right. So basically, if you look at the Southeast Asia's, from different country perspective, I think they already issued most of them. They already issued their digital bank license, and they are not going to open up new license every year. Okay. Having said that, Singapore have 4 digital banks licenses, Malaysia have 5, Philippines have issued 6, okay, and Thailand is actually on the way setting up this regulatory framework. They have not started to issue the license yet, and Indonesia is the one that we already seen, I think 10 or more digital banks in Indonesia, where Indonesia does not practice a new digital bank regulatory framework. They will adopt the existing commercial bank framework. Okay. So in that space, so applying a license is just one. Okay, but sometimes with the restrictions of number of license, say for instance Malaysia, during the application stage, it attracts more than 29 applicants. Okay, just for the mere 5 licenses. Okay, so the competition is very, very strong. It's not easy to gain access into this digital bank entrance. Okay, what happens, the next options for you is that you can actually try to acquire a smaller bank. So number one, you need a bank license that you can apply for it. If you can't apply for it, you just acquire from a smaller bank. That is typically very usual, and C-Bank took this route to set up the C-Bank in Indonesia, and it becomes one of the very successful bank. And the third route is where you also saw that a lot of existing incumbent banks set up another new digital bank brands. They do not require additional license, but in this case, take for instance, Standard Chartered have a Tomorrow Bank in Thailand, Indonesia, and a few countries. And in Malaysia, our hometown here, we have Bank Islam have another brand called BU. RIG Bank have another brands called Rais. So this is the way they actually operates. Like DBS in Singapore also use digibank to access into emerging markets. So from these three approaches, okay, there are pro and con. Of course, one is for the incumbent. The other two are for the new entrants. Okay, so faster time to market is easier by acquiring a smaller bank. They have some physical presence, okay, but you don't tap too much onto the brick and mortars, but actually use their brand, rebrands, and then go digital, offer something niche, okay, that is actually transforming their entire business.
Correct.
Okay.
That I think if let's say what's happening in Indonesia, if you're saying that 10 digital bank, not 10 digital bank license, but 10 digital bank as a result of the incumbent bank or the traditional bank expanding their business into digital bank. So that probably be a quick win because the database is there, the customer base is there, the products is there. So in terms of what add on is just the technology and outreach to the customers, outreach further
Just
to the
to add
customers.
on to this, basically the benefit of actually acquiring a smaller bank is not really about the customer base, because typically we can see a lot of consortium or platform players actually turning into banking license. Example, those like food delivery platforms or e-commerce platforms or wallet platform who actually desire to become a bank themselves. So what they do is they acquire a bank. So they will repackage the bank and to fill and support their ecosystems. So whatever financial products required from them can be actually supplied by their subsidiaries here.
Yes.
Okay.
And I think with technologies, with availability of solutions, to come out with products, to come out with new product, I don't think it's a challenge anymore. It's just the system wise, it can handle almost any products that you throw into the system, right? Okay, so we know now there's options of you coming in to set up a digital bank. How we gonna do this? But we mentioned earlier, quite interesting. You mentioned earlier that about 26 out of 250, roughly about 250 digital bank is losing money. Okay, 26 is making money, but the remaining is losing money. So about 90% is not, well, not to say losing money. They are in loss, but they are not because it's not recovered yet, because part of the anyone coming in to set up a new digital bank is fully aware the ROI will recover, the recovers of the ROI will take about 5 to 6 years to come in. So first year is expected loss, and I think this is expecting, but why are digital bank actually are having difficulties to generate profit? I mean, you have the technology, you have the accessibility. I mean, it's not only, for example, if I'm in Malaysia, my outreach is not only in Malaysia. I can, because of technology, because of internets, because of webs and all that, I can actually access when I'm from overseas to do the banking here. But why are digital bank not generating profit?
Okay, actually looking at this, if you look into the operations of the digital banks, okay, during the early days, actually most of the digital banks are funded by VC, venture capital. Okay, so they have Series A, Series B, Series C, and a lot of venture capitalists to inject their investments capital into the business. That's why their main business is taking all these these fund injections to grow the business. Okay, so what they do is they actually invest a lot into the customer acquisition. Okay, they create a lot of incentive, a lot of perks. You have a rebates, you have a better interest rates, you have whatever free offer give here and there to attract the loyalty. Okay, to acquire the customers and attract and retain the customers. And the cost is very high.
Very
okay, although they do not maintain a brick and mortar branch, but they spend too much. Their overhead to maintain or to acquire a customer is too high. So we actually understand this. During the early days, okay, most of the VCs or the market trends accept this is the norm. They are looking at the 200-300% growth for each of these digital banks. But having said that, they are still making loss and recovering process. Okay, but when it comes to the last 5 years, you can see when they actually enter into Asia Pacific, that is a different landscape that given you opportunity to turn around the bank within 2 years. China Maybank, China WeBank, 2 years. Okay, who else? I have a long list on my hand. Bank Jago, less than a year. BNC Bank Indonesia, also within 2 years. So you have many of the success story within 2 years. But having said that, these are the extreme excellence case.
Yeah.
Okay, so that's why the banks have to learn from the mistakes, or maybe to optimize their ability to generate profits. Okay, so what we're actually looking at is the factors driving the profit generations is a few. Number one, the access to the customer base, the customer acquisition cost, as I mentioned earlier. Okay, that's why you see a lot of conglomerates or telco or
Yeah.
big organization or messaging platforms that comes into this play because they have a massive customer base. So for them to acquire this customer require less cost to them. Okay. Number two, technologies. The use of technology will help them to actually lower their cost. Typical operational cost in a this incumbent bank is high. Cost to income ratio is about 40-50%. Okay, which we only expect lesser than 20% for a digital bank. So how can they do it? Is by leveraging on technologies to automate the processes, to improve the user composable these consumption models, pay as you use it. Okay, so you don't overspend heavily into a big
I think yes, because yes, technology is very critical for the digital bank. But okay, in short, we need technology to help you digital bank. But I think after this we'll discuss shortly after this we will then I think I'll get EK to, because technology is very close to your heart, Chief Digital Officers, isn't it? So that I think we'll have it here.
We'll put this later.
But we'll put that later. Yeah. And then what else? Because
Okay.
of
This time I talk about the customer
Customer
base,
base.
technology.
Yes.
Okay, the third one is the ecosystem. Okay, now you see today we do not bank by our own. So if you look at one bank, let's say if our hometown to us is like Maybank or CIMB, they don't just rely on their own access to the customers, but they actually partner with third parties. So the effective of the ecosystem will bring in the opportunity to cross-sell, to do the embedded finance. Example we mentioned just now, if you actually connect to a wallet platforms, the wallet operator only have the e-money license. They are not able to take in deposits. They are not able to provide lending. So they can't do buy now pay later, although they have massive of data and opportunity. So they need a license which the digital bank or the incumbent bank can actually provide this convenience. So that is another option that making them more profitable through a proper business partnership, because that will reduce their time to market and also their customer acquisition cost. Next, the fourth one will be the branding, of course. Of course, if you look at here, if it says the banks is owned by Grabs, so you will have very good confidence about this particular brands by itself. Okay, so the brands really count. This Ali and Tencent also actually went into multiple countries. So we also see their strategy in regional is to strengthen, to have their presence in every country. I try to establish one local presence there. Okay, and then I link it up as my regional presence, and this become my pyramid and build my financials arm for my entire organizations. Okay, that is also another areas. Okay, and the last one is the support from regulatory frameworks. There are a lot of constraints that I mentioned just now. Let's say the payout capital, the deposit cap. So all this become a challenge for digital banks. So they need to work out their business plans. How would they be able to actually entering into the blue oceans? How can they create a blue oceans to capture a new markets? Okay. Now typically we know that although they say with the use of technologies, the operational costs are significantly reduced. But the risk for their business is high because of the targeted market. So they are using some sort of AI or whatsoever to try to actually address the risk in this area as well.
Because you can see, partnership, the digital bank partnership with others, business owners or other so-called business service provider like e-wallet, this sort of things is very critical, because then you can see, because regulatory wise, as you mentioned, e-wallet couldn't take deposit, but with the working together with a digital bank, then the deposit placement can take place there. And also, I think customer database, because you see, in Malaysia in particular, we have one bank we have launched, and I think the database is quite huge. Detail. But there are also other potential so-called digital bank which has been awarded the license, is now in the process of accumulating, increasing their customer base by offering, if you start to buy your groceries and they are start to give you loyalty point, is basically to capture that database, and ultimately when they launch their database, even though they have their own database because they're currently a service provider, but then that will help out to increase their database, and quickly when they launch their digital bank, to actually offer a product and to capture the market in there. Very interesting in that. Yeah, so it's about marrying the right partner, and how do we grow, how do we then start, even before you start operating the digital bank, how do we then increase our customer base. And I'm sure the whoever is own the digital bank have now planning when they launch what product and what offerings do they have to go. Now, I think we're going to go further. I think this is close to your heart. I mentioned about you being the chief digital officers. Okay, now how does technology help to scale the business? We mentioned in shortly just now, we have tax and all sorts of things. What can technology offer to help this digital bank?
So when it comes to technologies, the IT spending in a bank is typically around 15 to 20%. Okay. So what happened is, okay, in the digital bank, you spend around the same amount of money, but what you are looking at is the optimization of operational efficiency and also the winning factor to win over your customers. So that helps them to build a very effective customer journey, or as a customer-centric design. Okay, with all these things, you would need a system or architectures of core banking that is very flexible and agile to actually facilitate your creativity, your innovations in creating new products. Quickly go to market and capture whatever opportunity at the lowest cost possible, at the fastest time possible. Okay.
And at the furthest outreach you can reach, yeah? Furthest, because it's all on webs and apps anyway. Okay, so in other words, in short, the technology, cost-wise is the same. However, the outreach for customer will be greater, because then you don't need brick and mortar. You don't need a bank to be there. And outreach can be done through a simple thing as the tablet, simple thing as your iPhone, phones, simple thing as your laptop. But you can mention at the same time, you're operational. Because of technology capability, a straight-through process can be done. Automated screening, automated approval can be done, so that at the back, in your back operation, in your back room, the operation become again less humanization in that sense, and the critical part is less error, because error to the bank is actually very critical. The bank do not want to have a wrong address, wrong identification number, wrong information on the customers, because later on then it becomes a difficult case for the bank to recover for any sort of thing. So accuracy of data, speed of processing data will actually contribute more to the profit, correct? Okay. So I think that's, anything else. Okay, we are reaching almost the end of our shooting. Any advice there that we can offer to the potential digital bank or existing digital bank players?
I think one of the key factors for digital banks is that you need to be fast. A lot of time when digital bank, they took too long time to actually design their own new bank processes and all those things. Typically, you will see more than a year in order to launch a very basic essential products. Okay, but what we can do is, okay, we can bring in the cloud solutions for you with the open API ready standards. Okay, allowing you to actually tap into the partner ecosystem very quickly during the day you launch the systems, and it can be done half of the time that you actually build your own. Okay, so we'll go through the journey together with you to actually assemble what is necessary. Okay, we have more than 50 over modules here, and we are able to actually assemble the necessary components to help you to go to market much more faster and comply to the local regulatory requirements, especially if it is Islamic. So very uniquely, you see in Malaysia, we have an Islamic digital bank license. Okay, and in the regions, perhaps it may be relevant for Indonesia as well.
Mm.
Okay, and Philippines potentially they may look after the Islamic potential also.
Mm.
So those are the areas that we can bring to the markets. Okay, because you don't have to reinvent the wheel, but at the same time, it allows you the maximum innovation and creativity to design your own product, to stand out, to reach out to different markets. Okay.
So, I think what EK has mentioned here is that if let's say any of anyone out there who is interested in actually starting up a digital bank or improving the digital bank, I think the offer on the table here is that give us a call, talk to us, consultancy can be provided, whatever shortfalls or whatever requirement in terms of solution can be provided. I think technologies expertise also can be provided in that to help you to actually I need to start a digital bank. We got the offering here on the table. We can help you to do this quickly because I think in digital bank, speed is the name of the game. You cannot take 1 year to actually introduce a product because by that time, the other digital banks have taken in the business. So because your population is limited in that sense, yeah, I think multiple holdings of accounts by individual with banks, probably they have maximum 2 or 3. Nobody have accounts in every bank. So you have to actually quickly run and making sure that your digital bank get the customer base and then your profit starts coming in. Yeah. Okay, with that we conclude the podcast for today. If let's say, however, you need any particular further clarification and you need us to actually come in and discuss with you, the numbers will be shown. The contact details of the EK and all that will be shown in the comments. So have a look at it and we'll be more than happy to help you. Right? Until then, take care, be safe, and stay healthy. Bye.
Thank you.